Welcome back to another episode of Gimme Some Truth. Mitch and Stan and I are in the booth today talking about a topic that if you are looking at Portugal, if you live in Portugal as a U.S. expat, frankly, if you live anywhere as a U.S. expat, could affect you, NHR and kind of what happened. So some changes have been made, so we'll get to those. But Stan, to kick it off, what is NHR? Why does it matter? And more importantly, why should people, U.S. citizens, U.S. expats, why should they care about this thing?
Okay, so I mean, today we're talking about some tax issues that may have finally been worked out in Portugal for people under the original non-habitual residence program in Portugal, which provides like 10 years of special tax incentives to people who move to Portugal from outside of Portugal.
And this started about, what, 10, 15 years ago?
About
somewhere
15
in there?
years ago,
Okay.
A dozen years ago. But,
Sure.
But this program is actually closed now. So you can't get into the original NHR program going forward, not since the end of, 2024 was the last tax year that people could be on their first year
Gotcha.
of these incentives,
Okay.
right? There is a new program out, and some regs have come out recently, so we'll be talking about that sometime soon, I'm sure. But anyway, a lot of Americans chose Portugal over more probably traditional European destinations for Americans to live. Portugal became hot.
Yeah.
And NHR played a big role in this because it excluded from Portugal tax. Most of your U.S. sourced income was excluded, right? Of course, you're always taxed in the United States.
Sure.
If you're a citizen, we're the one major country in the world that taxes that considers all U.S. citizens to be tax residents no matter where they live.
Sure.
In the world, right?
And the NHR that's a pretty those are huge incentives. I mean that's a pretty powerful program.
The Portuguese taxes, whether we're talking about ordinary income tax or portfolio tax or capital gains tax, if you will, is in either case the brackets are steeper. I mean,
sure,
you're generally subject to more tax in Portugal than you would be in the U.S.
Sure,
right. NHR changed that for a 10-year period, so it became attractive for people who own their own businesses and
sure.
work anywhere in the world. Digital nomads, early retirees loved Portugal because we're talking about taxes. It made the tax burden of Portugal go away somewhat, but importantly, healthcare is so much cheaper. Right?
Sure.
If you're not eligible for Medicare yet, especially, sure, it can be very expensive to retire early in the United States.
Yeah.
Right? So NHR, boomed. So we're talking about thousands and thousands of Americans that are in, year 2, year 3, year 4,
sure,
year 5 of a 10-year period where they're not taxed on their IRA distributions, they're not taxed on their dividends or interest. But the Portuguese tax authority has taxed them on their capital gains, okay? And the reason is that the Portuguese tax authority read the tax treaty, the convention between the United States and Portugal, and Article 14 of that, entitled Capital Gains, says that capital gains from the sale of personal property or movable property, non-real estate, right?
Sure.
May only be taxed in the country of residence. Okay. NHR is a program that says, well, under Article 81 of our tax code, NHR applies, and these tax incentives apply, and no tax in Portugal applies, but only if the income item is taxed in the source state, which would be the United States if you had a brokerage account that held securities and you realized gains, right? So from the AT, which is like the IRS in Portugal, from the AT's point of view, you were in this odd situation where like your dividends didn't get taxed, right? your interest didn't get taxed. But if you sold something, you had to pay capital gains in Portugal because of that wording in the treaty.
And to make sure I'm tracking on timeline here,
Yeah.
the AT, when did they come to this conclusion?
Well, I mean, from the inception of NHR, they just expected all of their tax residents to declare their capital gains, and they would impose tax on capital gains, right? Usually, if you live somewhere, they can tax your worldwide income from all sources. NHR modified that a bit, but they read the treaty as saying, well, this is only taxable in Portugal, so, we have the right to tax it. There's no NHR break for you to have here. Okay? So why is that wrong? Well, it's wrong because of citizenship-based taxation, because the United States loves it. The Treasury and the State Department negotiate treaties with this in mind. Virtually every tax treaty has a savings clause in it, where and it doesn't necessarily fall into an article in the treaty. It can be in the protocol document that the State Department releases with the treaty, which is basically saying, okay, here's the way that this treaty should be read. And there's something called the savings clause. And the savings clause always says, despite the language in the treaty, any language to the contrary, the U.S. reserves its right to tax its citizen to the fullest extent of domestic tax law. So, basically it's saying, well, no matter what this treaty says otherwise, we're taxing you, okay? And then the savings clause can have exceptions where there are specific items of income that are excluded. But capital gains, I don't believe I've ever encountered a tax treaty where capital gains is excluded from U.S. taxation.
Sure.
There's oftentimes, if the treaty happens to line up saying that only the resident's country can tax Social Security and the U.S. can't, if that language exists, kind of like the capital gains language in Article 14 in the Portugal Treaty, then sometimes it'll come down that, it'll be excluded by the savings clause, and you won't owe taxes on Social Security in the United States, only where you live.
So for somebody, if I'm living in Portugal, and I'm in the third year of NHR, what does 2025 look like for me? What does 2026 look like? What is potentially different, and what do I need to be aware of?
What's changed is in 2022 there was a Portuguese tax law firm, RPBA, I believe, had a client challenge this position because the AT had ignored the savings clause. And they won an arbitration when the unanimous 3-judge panel said, yeah, I mean, clearly this income is taxable in the United States. So your argument that it's not eligible for the NHR benefit because it's not taxable in the U.S., it's not accurate.
Sure.
But the AT then said, well, this was an arbitration decision. It's not really binding on us. And we're going to continue our policy of treating this as taxable. That's what they said. Okay. So that created a lot of confusion. Right?
Sure. Yeah.
So, according to some accounting firms, they would, have the clients pay the tax, but then petition for a refund. In some cases, they just pay the tax, right? Because the AT says what the AT says. Right?
Sure.
And it's not enough money. The juice is not worth the squeeze. We're not going to spend the money to fight.
Sure.
To keep you from paying $2,000 worth of, or 2,000 euros worth of capital gains, right?
Yeah.
Because it's going to cost more than that.
Right.
Right. So a lot of people, begrudgingly kept paying, right? But apparently one tax firm, completely changed up their policy and got little resistance from the AT with the position that it was exempt, until one client recently was called out on it and said, no, you owe tax on this. And they said, well, we're taking you to arbitration again.
Sure.
This time it's different, though, because according to that firm, and obviously the opinion's not published, it contains personal information of the taxpayer. But according to them, this time the AT said, the savings clause, yeah, it's a real thing. It's a terrible argument that we've been making. Mea culpa. you win, and we're going to pay you, interest on the amount that was, taxed inappropriately. We're going to give you the refund. And we're going to pay you.
When was that?
That was May.
Okay.
So it really just happened.
Yeah,
right?
For sure.
So now I just wanted to bring it to people's attention because there are a lot of Americans in Portugal. We have lots of clients that could be affected by this. And it's time to re-engage your accountant in Portugal, right? And if you're doing this yourself, don't do it yourself. Accountant in Portugal. But it's time to re-engage your accountant. I have a blog on this. There's a link to the accounting firm's, discussion of this policy change. And they see it as a policy change. Okay, it's time to re-engage with your accountant and say, hey, it's time we stop doing this. And in fact, the question should be, hey, do we go back and refile our taxes for last year, the year before, and try to get the money back that we inappropriately paid to Portugal?
Right. Well, 2 points I want to make. First, I love doing podcasts with Stan because the juice is not worth the squeeze. I mean, that's from this point forward, I'm going to use that 3 more times today and for the rest of my life. First of all, thank you, Stan. That's fantastic. Second of all is if you're working with an accounting firm that is, what will we say, murky on the subject, maybe time to look for a different accounting firm. Is that also a fair statement?
Look, clients always reach out to us and say, what should we do?
Yeah.
And, we're not Portuguese tax preparers, right? So whatever we think is right, and we've always thought that, the AT's position on this subject was wrong.
Sure.
But it's, it's up to your accountant, right?
Yeah.
And accountants, some accountants just by nature, right, it's very transactional. It's not a relationship like an advisory relationship.
It's not consultative in a way that we would want it to be.
A lot of times it just looks backwards and that's it. What happened in the past, and I'm going to file a return.
Let's get them in the door. Let's get them in the door. Let's get them out the door. Let's fill out the forms. And God forbid it ever gets challenged by the AT.
Sure.
Right? So there was this natural inclination to ignore the legal arguments and just pay the taxes.
Sure.
Right? Now it's time to re-engage with those people and say, well, look, apparently the AT's changed their policy. So at the very least, you need to have a conversation with them because it's your industry.
Yeah.
And it's your country.
Yeah. And it's changing fast.
Confirm whether or not, in fact, they're going to allow the exemption going forward.
Yep.
At the very least, you accountant need to do that. If you're not willing to do that, and if you're continuing to make me pay taxes, I would have a conversation with another accountant.
As we wrap up here, Stan, is that your main takeaway for people? Just the awareness piece? Is that kind of because again, this is changing so fast.
Yeah,
and
there's not taxing capital gains can alter the strategy of advice that we would give our clients in terms of what money you live on while you're in this program.
Not only that, the allocation that we would build for them.
The allocation, the way that we decide whether or not money's coming from the IRA.
Exactly, right.
Exactly, right? So now there is a beneficial window for the brokerage account, just as there is for the IRA account.
Sure.
Right? And so it's a game changer. People should, A, be aware of it, and B, make sure that their tax preparers are aware of it. And then when they've gotten confirmation that, in fact, this is going to be their tax reality going forward, and maybe moving backward again, and then, it's time to communicate that with your advisor.
So,
it changes investment strategy, via distribution strategy, possibly allocation, like you said. But, it's something that, needs to be sorted with your accountant. If your accountant doesn't change their behavior and they continue to, report it and pay taxes on it, then that's a problem. Right?
And I would say, too, that it's always been our stance within the firm that we're happy to get on the phone call with an accountant and have a conversation, even if just to know, left hand knows what the right hand is doing.
100%.
Yeah.
100%. In the expat world, that oftentimes is a more difficult realm because you're dealing with, a foreign accountant and you're, some U.S. advisor and, and you don't have, that firm comfort level knowledge base like you do with the Internal Revenue Code.
Yep.
Right?
Yep.
So it's a little different, but yes, by all means, it's something that we need to be on board with. The other upshot for this, and people outside of Portugal, other expats or would-be expats, people thinking about moving across the world. The other instructive thing about this is that the AT's misreading of the treaty is something that your domestic taxpayer could easily do.
Sure.
The do-it-yourself taxpayer on your U.S. taxes could be reading this treaty and think, well, I no longer have to declare this on my U.S. tax return, right?
Yeah.
The domestic accountant may look at the treaty, for 2 minutes,
yeah,
right, and miss the savings clause. Okay, always understand that there is a savings clause when you're looking at these treaties and trying to determine what your U.S. tax exposures are.
Really?
This is the rare case where, because of NHR, a taxpayer is going to pay less taxes because of the savings clause. It actually is saving them. But in most cases, the savings clause exists so that the IRS can save revenue that otherwise would be lost when you leave the country, right?
Funny how they got that piece.
It's quite ironic.
It's funny how they figured that piece out.
It's quite ironic that it took, that the savings clause ends up now possibly saving tax dollars or euros.
Yeah.
All right, so Stan,
for an American.
That I think is
that's a first time thing for me. I've never seen that before.
So I got a question for you. We're not on podcasts all that often together, right?
No.
It's been a couple of years, at least in my memory, since the last one we did, which Portugal happened to be a topic. So real quick quiz. Do you remember what we titled that podcast when you, myself, and Johnny, actually, who was a guest, do you remember what we called that podcast?
I do not.
Okay. I think it was something to the extent, we'll fact check this, Portugal, it's like California in the 60s. Was that the the title? So my question is, now that with the changes that we've discussed in this podcast, right? There's some changes in HR, et cetera. It's like California in the 60s. Is that still applicable?
I mean, Portugal's like California weather. Right? And without NHR, Portugal's like paying
California
tax and California taxes.
Yeah.
Right? So it's even more like California in the 60s, man, because tax rates were pretty steep in the 60s.
That's a great place to stop. We're up against the time here, and we wanted this to be kind of a kickoff to NHR Portugal. There is more information coming out. Stan, you're going to write a 2.0, I believe, and we'll continue to address this topic as you said, we have many people that are affected by it. We have many clients that are in Portugal and future clients that are going to move to Portugal.
Many more people moving to Portugal, even though these initial tax incentives went away.
Yeah, this won't be the last time we talk about this topic, and for that, we really appreciate people tuning in. And if you want to hear more about this topic or an offshoot of this topic, let us know. Communicate with us, and we'll be happy to record something in the future. But otherwise, until we see you again, thank you for tuning in to Gimme Some Truth.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.